Stop watching that ticker on your screen. That $111.90 you see right now, it's a lie. A complete fabrication designed to keep you calm while the system collapses around you. Today is January 27th, 2026, and the real market has been exposed. Right now, as you watch this video, physical silver in Dubai is trading for $170 per ounce. In Tokyo, it's $150. In Shanghai, it's $140. But on your screen, COMEX says on $111.90, it's over. The paper market has officially disconnected from physical reality. The system is broken. The illusion is shattered. In the next 22 minutes, I will show you the irrefutable data that proves the price on your screen is nothing but a ghost, a comforting lie before the final collapse. Wake up before it's too late. This isn't a market report. This is an escape plan. The price on the screen is the matrix, a digital illusion designed to control you. We're going to unplug you from it. First, I'll expose the global premium explosion with live data proving why silver prices are wildly different in every country. Second, I'll show you the force majeure trap, the legal clause your broker is preparing to use to steal your paper silver and leave you with worthless cash. And third, we'll follow the smartest money in the world. I'll reveal their secret escape route, the physical assets they're hoarding while you're trapped watching a fake number on a screen. This is your red pill moment. Are you ready to see how deep the rabbit hole goes? So why is this price disconnect happening? Why is silver in Dubai 50% more expensive than in New York? The answer is one word: desperation. As we've discussed in previous videos, the world has been running a structural silver deficit for 5 years. We're consuming more silver than we're mining, every single year. But now, with China's export ban and the Pentagon's panic buying, that deficit has exploded into a supply shock. There's no physical silver available in the market. COMEX and LBMA, the paper markets in New York and London, are still pinning the price at $111 to prevent panic, to maintain the illusion of control. But in Dubai, Tokyo, and Shanghai, the physical markets where real buyers trade actual metal, they're not accepting that lie. They know the truth. Physical silver is scarce, and they're willing to pay any price to get it. Let me show you the data. Dubai Gold Souk reported on January 25th that physical silver bars are selling for $168 to $172 per ounce, depending on purity and size. That's a $57 premium over COMEX spot price. Tokyo Commodity Exchange recorded physical silver transactions at $148 to $150 on January 26th, a $37 to $41 premium. Shanghai Gold Exchange, which is controlled by China and only trades physical metal, listed silver at $138 to $143 as of this morning. That's a $27 to $32 premium. Even in London, where the LBMA paper price is set, if you walk into a physical dealer and try to buy 1,000 ounces, they'll quote you $135 to $145 per ounce. The paper price is $111.90. The real price, the price you actually pay for metal you can hold, is $135 to $170. That's a 20% to 52% disconnect. This has never happened before. Not in 2011 when silver hit $49, not in 2008 during the financial crisis, not even during the Hunt brothers squeeze in 1980. The system is broken, but you might be thinking, so what? I'll just call my broker and demand delivery at $111. That's the trap. And in the next 3 minutes, I'm going to show you the legal clause hidden in your contract that gives your broker the right to steal your silver legally. You think your ETF shares are safe? That your unallocated silver account is secure? Wake up. When physical silver is trading at $150 in Japan and your screen shows $111, no bank is going to give you the cheap silver. Why would they? Why would they buy at $150 and sell to you at $111 and lose $39 per ounce? They won't. Instead, they're going to invoke the most dangerous clause in your contract, force majeure. It means act of God or an unforeseeable event beyond our control. They'll declare that due to unprecedented global supply chain disruptions and extreme market volatility, we are unable to deliver physical silver as contractually obligated. And then what happens? They'll cash settle your position. At what price? The fake $111.90 screen price. So you thought you owned an asset worth $150, but you'll receive $111.90 in cash. And they'll keep the actual metal. This is happening right now. On January 22nd, 2026, JP Morgan Chase sent notices to select high net worth clients holding silver derivatives that their positions would be administratively closed at prevailing COMEX prices due to operational constraints. Translation: we're taking your silver, here's cash, deal with it. On January 24th, Scotia Mocatta, one of the largest precious metals dealers in the world, suspended all new physical delivery requests, citing inventory reallocation requirements. Translation, we don't have the metal, stop asking. Oh, and this morning, January 27th, BlackRock updated the SLV prospectus with new language buried in Section 9, Paragraph 7. The trust may satisfy redemption baskets through cash payment rather than physical delivery during periods of extreme market conditions or regulatory restrictions. They're preparing to steal your silver and hand you worthless paper dollars. But here's what they're not telling you. This isn't just about fraud. This is war. This story isn't just about financial manipulation. It's about survival. On one side, you have industrial giants, Apple, Samsung, Tesla. They need silver to manufacture their products. They'll pay $200 per ounce if they have to, because if they don't get silver, their production lines shut down. An iPhone uses 0.35 grams of silver. At $200 per ounce, that's 2.20 ounces worth of silver per phone. Apple can afford that. They'll pass the cost to consumers. But if they can't get silver at any price, they can't make phones. And a company that can't make products is worthless. On the other side, you have the Pentagon. They need silver for missiles, fighter jets, satellites, radar systems. They'll pay $500 per ounce if national security demands it. A single Tomahawk cruise missile contains 2.8 pounds of silver. At $500 per ounce, that's $22,400 worth of silver per missile. But if the military can't build missiles, America's defense collapses. And on the third side, you have you, the private investor, the retail buyer. Now tell me, when the last physical silver bar is available, who gets it? Apple, the Pentagon, or you? The answer is obvious, and it's terrifying. But the scariest part isn't the competition. It's what governments are doing to lock ordinary people out of the market entirely. On January 26th, the Bank of Japan announced a new strategic mineral transaction tax of 35% on all private purchases of silver over 10 ounces. Translation: if you buy 100 ounces at $150, you now pay 202s or $50 per ounce after tax. Why? To make it economically impossible for ordinary citizens to hoard strategic resources. South Korea followed on January 27th with a 40% tax on silver purchases. The European Union is rumored to be voting on similar restrictions this week. They're using taxes, regulations, and bureaucracy to squeeze retail buyers out of the market while industrial users and governments buy everything that's left. The door is closing. And once it shuts, you won't be able to get physical silver at any price. But while ordinary investors are being locked out, the wealthiest people in the world are executing a completely different strategy. So when the system is breaking like this, what are the richest people on Earth doing? Are they watching the screen? Are they trusting the paper price? No, they're fleeing. They're selling paper assets, stocks, bonds, ETFs, and converting everything to physical assets. And they're moving those assets from west to east. In the past 3 months, over $58 billion worth of gold and silver has been withdrawn from vaults in New York and London and shipped to Dubai, Singapore, and Zurich. 58 billion, why? Because in those locations, confiscation risk is lower. Governments are less likely to seize private holdings under emergency powers. Let me give you specific examples. Ray Dalio, founder of Bridgewater Associates, the world's largest hedge fund, gave an interview to Bloomberg on January 18th. He said, "We are significantly underweight U.S. dollar-denominated assets and overweight hard assets stored in jurisdictions with strong property rights protections." Translation: we're dumping dollars and buying physical gold and silver in places the U.S. government can't reach. Stanley Druckenmiller, legendary investor, told CNBC on January 21st, "The monetary system is breaking. We are positioning for a world where fiat currencies lose purchasing power and tangible assets become the primary store of value." Warren Buffett, as we covered in a previous video, is sitting on $325 billion in cash. But new 13F filings show he's also accumulated stakes in Barrick Gold, Newmont Mining, and Freeport-McMoRan, companies that own physical gold, silver, and copper in the ground. He's not buying paper. He's buying claims on real metal that can't be printed or manipulated. And here's the most shocking move. On January 23rd, an anonymous buyer purchased 12,000 ounces of physical gold bars from a Swiss dealer and paid for immediate transport to a private vault in Dubai. The purchase price was $36 million. But here's the kicker. The buyer paid a 22% premium over spot price to ensure immediate delivery. That's $8 million extra just to get the metal now instead of waiting. Who pays $8 million extra for immediate delivery unless they believe the system is about to completely collapse? The message is clear. The smart money is abandoning the paper system and running toward physical reality. They're not watching the screen anymore. They've unplugged. The question is, have you? So how do you escape the matrix? How do you protect yourself from the fake screen price and the coming confiscation? You have 3 immediate action steps. Action number 1, unplug from the screen. Sell your paper, silver immediately. SLV, SIVR, unallocated accounts, futures contracts, all of it. I know what you're thinking. But the price is going up. I'm making money. No, you're not. You're accumulating numbers on a screen that will disappear when your broker invokes force majeure. Take the loss if you have to. Cut your attachment to the fake price. It's not real. Convert everything to cash, and then immediately use that cash to hunt for physical metal. Action number 2, hunt for physical. Finding physical silver is now a mission, not a transaction. Check local coin shops, call private dealers, search peer-to-peer marketplaces, join precious metals forums where individuals sell to each other. Yes, premiums will be high. Yes, delivery will take time, but every ounce you get into your hands is worth more than 1,000 ounces that only exist on a screen. And don't just limit yourself to silver. If you can't find silver, buy gold. If you can't find gold, buy platinum or palladium. The key is to hold something physical that can't be deleted with a keystroke. Action number 3, think beyond precious metals. If metals are unavailable or too expensive, pivot to other physical assets, productive land, farmland that produces food, timberland, mineral rights, fine art, paintings by established artists that hold value across generations, rare collectibles, vintage watches, rare coins, classic cars, anything with intrinsic value that can't be printed. The principle is simple. Own things governments can't create more of. But there's one final critical step. And this is where 99% of silver owners make a fatal mistake that makes them easy targets for government confiscation. That fatal mistake? Insuring your silver. When you insure your precious metals, the insurance company creates a record. They document exactly how much you own and where it's stored. That record goes into a central database. And when governments decide to confiscate private holdings under emergency powers, they access that database. It's exactly what happened in 1933 when FDR confiscated gold. The government knew who owned gold because the people had declared it on insurance policies and safe deposit box registrations. So here's the final rule. Don't insure your silver, protect it yourself. Store it in a location known only to you. No documentation, no insurance, no paper trail. Become a ghost? Yes, there's theft risk. Yes, there's loss risk. But those risks are infinitely smaller than the certainty of government confiscation. So, in the end, this story isn't just about silver, it's about reality. Do you want to live in a digital illusion controlled by banks and governments? Or do you want to embrace the real, tangible wealth you can touch and hold? Stop watching the screen. Open your eyes. Wake up. Now I want to hear from you. Have you noticed the price disconnect between paper and physical in your area? What's the real price you're seeing at local dealers? Are you still holding paper silver? Or have you already made the switch to physical? Drop your experience in the comments below. Let's compare notes and see how widespread this crisis really is. And subscribe to this channel if you want to stay ahead of the biggest financial lie in history. Because my next video reveals the 3 countries where buying physical silver is safest right now, jurisdictions where confiscation risk is lowest, and property rights are strongest. The screen is lying to you. The real price is $150 to $170, and it's only going higher as the system breaks. Wake up, get physical, get out of the matrix before the door closes forever.